Last time, we saw how the memory industry went from the United States to Japan, then to South Korea, and finally consolidated into three giants: Samsung, SK Hynix, and Micron. But SK Hynix was still living under Samsung's shadow. To catch up, it needed to bet on something Samsung was not prioritizing enough. That bet was HBM. So what is HBM? Here is a simple explanation. In traditional GPU designs, memory chips are placed around the GPU. They take up space and they are physically some distance away from the GPU. That limits the bandwidth for feeding data into the processor. If you have an extremely powerful GPU, imagine the flash with the appetite of a competitive eater sitting in the middle of the table. It can consume data incredibly fast. But ordinary GDDR memory around it may not feed data fast enough. That bottleneck is known as the memory wall. HBM's solution sounds almost brute force. Stack the memory chips vertically. Stack them 8 layers, 12 layers, one on top of another. That gives HBM more than 10 times the bandwidth of ordinary graphics memory. At the same time, the physical distance to the GPU shrinks from several centimeters to less than 1 millimeter. Lower signal loss, lower latency, lower interference. In simple terms, it can finally keep the GPU fed. The idea is not hard to understand. The hard part is building it. To connect and package so many layers of chips precisely, manufacturers use a technology called through-silicon vias, or TSVs. Each layer has to be connected vertically through the chip. There cannot be micron-level errors. That makes yield very difficult to improve. From a business perspective, HBM is extremely expensive. Back in the 2010s, AMD, the company that was known for GPUs and CPUs, was one of the first to see the memory wall problem clearly. AMD wanted to use stacked memory in its graphics cards, so it approached Hynix for joint development, but the technology was ahead of its time. There was no mature market standard, the manufacturing requirements were extremely high, and at the time there were very few customers who needed that level of memory performance. It was expensive, complex, and the market was tiny. It was like everyone else was building regular cars, while AMD wanted to build an F1 car before there was even an F1 race. If you looked only at short-term economics, Hynix had no reason to do it. But Hynix saw something else. It believed that even if HBM did not make money in the short term, the advanced packaging and vertical stacking technology behind it had real long-term potential. Maybe this was the chance to overtake Samsung. So Hynix told AMD, yes, let's work together. After several years of development, the first graphics card using Hynix HBM technology officially launched in June 2015. And as many people expected, commercially, first-generation HBM was a failure. It lost money. How bad was it? In 2019, AMD itself announced it would stop using HBM in consumer graphics cards. The technology was good, but it was too expensive. By 2020, the entire HBM market was only about $1.5 billion, less than 2% of the DRAM market. But behind that small market, Hynix has spent more than a decade and over $2 billion investing in HBM and iterating the technology. Of course, Samsung and Micron were also working on HBM. It was not only Hynix. For example, early Google TPUs used Samsung HBM, but SK Hynix cared about HBM more and pushed harder. Then right before the ChatGPT explosion, something crucial happened. In 2022, SK Hynix's HBM3 was selected by Nvidia and became the exclusive memory supplier for the H100 GPU. At that moment, Hynix probably did not realize that its decade-long HBM bet was about to deliver an extraordinary return. On November 30, 2022, OpenAI released ChatGPT. ChatGPT instantly ignited the global market. After that, the story became familiar. AI exploded, and then exploded again, and it still has not stopped. At the center of that explosion are AI training chips. Whether it is Nvidia GPUs, Google TPUs, or Amazon Trainium, all of them need HBM behind the scenes. Samsung's HBM3E did not pass Nvidia's quality qualification at the time. Micron's capacity was also limited. So in 2023 and 2024, SK Hynix effectively captured most of Nvidia's GPU memory orders. It successfully overtook the field and became the global leader in HBM. In the first quarter of 2025, SK Hynix's share of the HBM market reportedly reached as high as 69%. SK Hynix's operating profit began soaring in 2024. In 2025, it reached an astonishing 47.2 trillion won, around $30 billion. That exceeded Samsung's total operating profit across all businesses. If you look only at semiconductors, SK Hynix had already pulled far ahead of Samsung at that point. No wonder it could hand out those giant bonuses. Its stock rose more than 20 times in less than 3 years, helping SK Group secure its position as South Korea's second-largest chaebol and giving it a real shot at challenging Samsung's top spot. Of course, Samsung and Micron were not going to sit still, even though they had not focused as heavily on HBM earlier. They could still catch up if they pushed hard enough. In 2024, Samsung quickly replaced a large group of executives and aggressively converted general DRAM production lines into HBM production. It was difficult for Samsung to win Nvidia orders quickly, but it did capture major orders from Broadcom. Micron went even further. Near the end of 2025, it announced it would exit Crucial, its 29-year-old consumer brand. Not because Crucial could not survive, but because the enterprise AI market was simply too profitable and had too much potential. Why keep focusing on consumer products when the enterprise AI market is exploding? That also shows, from another angle, that Samsung and Micron are both going all in on HBM, and their market share is gradually rising. SK Hynix will not be able to take the whole market for itself. Here is another striking number. In the first quarter of 2025, when Samsung was still behind in HBM, its total quarterly operating profit was 6.7 trillion won. Its DS division, the semiconductor business, contributed only 1.125 trillion won. But after the business caught up, by the first quarter of 2026, Samsung's total operating profit reached an astonishing 57.2 trillion won. Of that, semiconductors contributed 53.7 trillion won. In other words, the semiconductor division's operating profit increased roughly 50 times in 1 year. Samsung may look like a company that does everything: phones, displays, appliances, chips, but in that quarter, about 93% of its operating profit came from semiconductors. To be clear, Samsung's other businesses still have very large revenue. Their business scale is huge, but their profit margins are much lower. Phones and displays can sit in the single digits, while semiconductors were above 60%. So we have talked a lot about HBM. But why are phone memory, car memory, and even computer storage prices rising too? That is the crowding out effect caused by HBM. The three memory giants only have so much production capacity. HBM and ordinary DRAM can use some of the same production resources. If you produce ordinary memory, you cannot use that same capacity for HBM. And when AI demand is exploding, and HBM has extremely high margins, of course the manufacturers will prioritize HBM. That is rational. But the result is that downstream phone makers, car makers, computer makers, and ultimately consumers all share the cost of higher prices. A few years ago, who would have expected that one of the ways ordinary people would feel the impact of AI would be through memory prices? Now, if we step back and look at the whole industry, you can see how brutal the memory business has always been. In the 1990s, there were so many giants. Within about 10 years, many of them were wiped out. Even major memory companies, often with government support behind them, could still fail or go bankrupt. Why? Because memory manufacturing has one very important feature: high fixed costs and highly standardized products. What does that mean? At the beginning, you need to invest huge amounts of money. That is the fixed cost. And it is not just money, it also takes time. But once a production line is built, the marginal cost of producing each additional memory chip can be very low. The products are also highly similar. Historically, Samsung memory, Micron memory, and Hynix memory were not that different from one another. That leads the industry into a big cycle. Demand rises, prices surge. Manufacturers invest and expand capacity, then capacity becomes excessive. Prices crash. Companies suffer until weaker players exit. Supply returns to normal or demand explodes again. Then the cycle repeats. Every downturn eliminates companies with too much debt, too little capital strength, or poor cost control. Airlines and hotels have similar problems. They also have high fixed costs and relatively standardized products. Capital markets usually do not like industries with such violent cycles. No matter how much money a company is making now, the next cycle could crush it. That is why these big cyclical industries often trade at low valuations. Price-to-earnings ratios often sit around 5 to 10 times, but now HBM is changing the structure of the memory industry. HBM is no longer a completely standardized product. Different GPUs and different AI chips require different customized HBM solutions. For example, SK Hynix is now very tightly connected with Nvidia. They design HBM interfaces together. At the same time, SK Hynix is also closely tied to TSMC, because TSMC's CoWoS advanced packaging is critical for AI chips. That trio, Nvidia, SK Hynix, and TSMC, has become one of the strongest teams in the current market. Samsung is not giving up either. Even though it stumbled with HBM3E, it has been catching up quickly with next-generation HBM4. It is involved in supplying Google's next-generation TPU, working with AMD, and reportedly signing an exclusive supply agreement for OpenAI's first self-developed chip, Titan. Because HBM demand is more stable and order cycles are much longer, It is pulling the DRAM market away from the old commodity cycle trap. The industry is moving toward higher value-added, more customized, and higher margin products. So why have these companies' stock prices risen so sharply? One reason is obvious: they are making enormous operating profits. But another key reason is that the business model of the industry is changing. And when the business model changes, the valuation framework changes too. That is why the market has suddenly released so much growth potential. This is the effect of the AI demand explosion. Once demand for front-end computing takes off, the entire supply chain gets pulled into a stress test. Wherever the bottleneck appears, that may become the next place where value is captured. Maybe it is energy, maybe it is advanced packaging, maybe it is HBM. The next link exposed by that pressure test may very well become the next trillion-dollar opportunity.